There we go. So technical problem to get started with. Then you should be able to hear me now. Good evening, Justin. Hi, Paul. Thank you for that, Paul. Audio is off. It should be working. Let me just double check. The audio should be working. Are you saying you can't hear me? See, this is why you have to start early. You cannot hear me, right? Okay. Let's go to the audio. Okay. Can you hear me now? Oh, you can. You could hear me. Ah. I'm going to change the audio back over now, so bear with me a second. Okay, just double checking again now. You can hear me. You can hear me okay now, yes? Hi, JT, Irby. Just double checking you can hear me okay. I think it takes a while for the messages to come, the comments to come through to me. So copy, I'm seeing copy, so I'm assuming that means that it's all working fine. Yeah? Can someone please just say, yes, it's working fine? Phew, thank you, Paul. Great. This is why I turn these things on early, because when I started off, before I had my mic muted, and and I was saying that the irony is that, don't worry, I'll be turning the camera off shortly before we get actually started. But the irony is that I'm doing a presentation this evening on automated trading, and yet some of you know me. No, I'm the biggest technophobe there is. So I'm just old school, really. So yeah, it's quite. I've just messaged my wife. She's just trying to phone me. So anyway, yeah, it's quite ironic. And then, of course, I got started here and had the mic switched off because I didn't realize I had it muted. Anyway, at least we're ready and all set to get going. So it's really good that I can see you guys there. You can see me at the moment, but like I said, I will be turning this off once we get started. Well, I will discuss that this evening, JT. So yeah, so I will be discussing all of that, and because I don't use bots, but I am using bots, and I'll explain once we get into this evening. So we've got a nice bit of time here. We've got 5 minutes yet to go before I can officially start this, and it was really just, I like coming on early so I can make sure that everything is working okay, and then we can get started. So good evening, Steve. And I think at the moment, all the comments I'm seeing so far are all coming through from YouTube, but we are broadcasting to Facebook as well, although admittedly we're still 5 minutes yet to go. For those of you who have very kindly come along early this evening, it's going to be a very relaxed presentation. Some of you know me, and I don't like doing formal presentations, putting a load of slideshows together and stuff like that. I'll just talk. So it's a very relaxed sort of evening with you, highly interactive. And can you see each other's comments? Can you all see each other or not? I don't even know how this works. Or you only seeing your own comments? I don't know. So I can just see a list of comments here. But yeah, I'm good. Thanks, Justin. Oh, did you? Okay, JT. Right, that's good to know. Yeah, funny enough, I'm speaking to Alessio tomorrow afternoon. We catch up. As you know, I sometimes stand in for him with his subscribers when he's away and stuff. So we act as a locum. But yeah, so what was I saying? Yeah, it's a beautiful day here in the UK today. Beautiful, warm September day. And so still sitting here in my shorts at the moment. It's such lovely weather. So yeah, it was. Yeah, absolutely. He did his broke his collarbone, didn't he? So yeah, I'll speak to him tomorrow anyway. So have a bit of catch up. I've known him for years and years. I don't know, probably about 14 years, I'd have thought. But other than that, Justin, yeah, it's, everything is pretty much um, as you are, really. There's not in my day-to-day trading and life, nothing particularly changes too much. I've just had a holiday, just a week or so. We got back last week. We try and avoid the summer period itself. But yeah, no, nothing too much going on. Just for me now, here we are in mid-September, and this is for me really the most important part of the year. From about now, everyone's getting back to work. Just checking the time here. I've got 2 minutes yet. Um, and the markets tend to change as you get into the autumn, and then it's usually the best time to trade is from really now, from the start of the autumn all the way through until sort of next summer, with a few interruptions with Christmas and Easter in the meantime. So it's that gearing up sort of period of, as far as I'm concerned, when you can get a slower summer, and then you think, oh great, okay, we've now got we're entering into what is traditionally a busier time in the markets, generally speaking. So we'll see. My take on equities, yeah, I mean, what we'll do is I will do quick Q&As and at the end. I'll be fairly interactive as we go through this, but just appreciate there, JT, if you want my views on markets, I can do that right at the end. And so, yeah, no, not a problem. Looking fit, you're saying, Justin? Are you proposing to me? That's very kind of you too. And well, that documentary was 6 or 7 years ago now, and yeah, I still work out, but I'm not like that. I mean, in that documentary, I was down to like 3.5% body fat when we did that. It just so happens I was doing all that training with my trainer at the time, so that was for a specific goal, just to do a transformation. So I'm not that extreme anymore, but I enjoy keeping fit anyway. I've got a Peloton bike. Yeah, got to use all this stuff. I actually had a video message from Sir Chris Hoy, the British ex-Olympian, 6 times Olympian, just the other day. So a bit of a joke, as a friend of mine knows him, and he put together a little skit video, just sort of having a bit of banter, because we're very competitive on our Peloton bikes. You didn't really change. I don't know. Anyway, it was 3.5%, which is very extreme. So yeah, before I started, I was probably around about, well, I think we'd fattened me up enough. I was thinking I was about 12% at the beginning of the challenge, and then 3.5%, or it was actually 3.3% at the end. But anyway, right, let's move on. I think we're probably just gone past, we've just passed 6:30 now. So officially, good evening. And so what I'm going to do first of all is get rid of my face here, and let's get this to full screen mode. So what I've got at the moment is just the regular charts that I use. And like I've already said, we're going to go through, this is going to be a very relaxed presentation. I've got the dog sat down here. He'll probably bark at some point. So it's going to be very relaxed this evening. There's no official slides or anything like that. I'm literally just going to be talking from the hip. So, and good morning from Silicon Valley. Oh, very, very good. Right. Okay. I better not get distracted now. So the presentation, I think, is using automated trading, if I can, the best way to trade. And within this presentation, I'm just going to be talking about the pros and cons of automated trading. And I said, and also that I'm going to demonstrate the automated trading software that I have. And so I'm going to demonstrate that for you tonight. But really, like with all aspects of trading, it's finding what's right for you. I've been trading 24 years. I'm an out and out, I'm old school. I'm a manual trader. I'm an FCA regulated fund manager as well. So I manage money for others as well. So so I back up what I do. Even though I'm a trading educator, I'm also an FCA regulated money manager as well. Like I said, I've been trading for a long time now. I'm not going to go through my entire history because most of you know that, and if you don't know it, then you can always look us up on our Ezeetrader site. Anyway, so really, what I'm going to talk about is automated trading, the pros and the cons. So let's actually go straight in and talk about the pros and the cons. Then I'm going to show you a little bit about this chart that I've just got up here at the moment. So I'm going to show you a little bit. I'm not in America, JT. I'm FCA regulated here in the UK. So I'm not regulated in America. It's UK. The FCA are the equivalent of the SEC in the States. So anyway, so the pros and the cons. For me, being very much a manual trader over the years, the cons for someone like me who's been trading for this amount of time are, one, detachment, because you've got to detach yourself. If you want to have an automated trading system or robot or whatever you want to call it, but automated trading running for you, you've got to have an element of detachment. And you've got to hand over an element of control. Yes, you're managing the system, but you've got to hand over that control. So for someone like me I love the art of trading. I love being able to do all of my analysis, my multiple market analysis, intermarket analysis, multiple time frame analysis, looking at the sentiment picture of a market and the fundamentals as well. I'm always aware of and conscious of the fundamentals, and then trying to bring all that together to make informed trading decisions. To then completely relinquish all of that, that would be quite a big thing for me. Because for me, trading is not just about, I did a video a couple of months ago, I think, it's not just about making money for me. It's the love of trading. Of course, making money is the end product. But for me, it's if I just handed everything over to a robot, well, where am I going to get my mental stimulation from now? Because for me, the mental stimulation of doing all that analysis, then get into trades and then riding those trades when I'm in that type of trade, and the mindset, the psychology involved in order to be able to hold on to your winners and let them run and not bank profits too soon, all that sort of stuff, all of that enjoyment that I love and I crave from trading, I would lack and I would miss if I just handed my entire trading accounts over to a robot, to an automated system. Even though I've got automated software, I'm going to show you it tonight. So what do I do? What have I done? Well, I'm still doing what I do. I'm still doing my manual trading for me, but of course I have set up an account for the auto software to be able to trade as well. And so that then satisfies what I'm doing. So because otherwise I would lose that sense of purpose. We all have to have a purpose in life, and I feel that trading is my purpose, as far as certainly from a work perspective. And so if I didn't have that purpose and that challenge from pitting myself against the markets, week in, week out, month in, month out, then I'd feel definitely a little bit lost. So those are the cons of automated trading. For someone like me, the cons are relinquishing control. Okay, although I must admit, with my software, it doesn't have to be fully automated. You can semi-automate it, and you can override even if it's taking trades, you can elect to close out positions manually anyway if you want to. But also you can have semi-automated, so it just sends you alerts, and then you decide whether to accept the trades or not. So it has got an element of that. Now, what about the pros though? So what about the pros of automated trading? Well, I seem to be coming across more people or maybe it's just newer people coming in. I'm not talking about existing traders who we've known and looked and traded with as our customers for years. Ezeetrader's been running since 2002, but certainly I see plenty of newer traders who want almost like a quick fix. They don't want to learn all the ins and outs of trading, which all the things that I love and that I'm very passionate about. I'm finding there's a group of people globally who sort of say, yeah, I'm not interested in that, Charlie. Just show me a way to make money, the quickest and easiest way, to do it, sort of thing. So there is, I mean, I'm not saying it's the majority, but there is a segment of people who are interested in making money from the markets, but just don't have the same interest in learning all of the stuff that you need to learn in order to be a manual trader. So for people that are like that, then it's a pro. For people who are time poor, it's a pro, because there's plenty of people who, although when we went through the pandemic, and obviously still are, but when we were all having all these lockdowns last year in 2020 especially, then yes, people had time then, and that's why we saw so many people getting into stock market trading, especially in the US. Ironically, one of the biggest reasons why people got into trading during 2020 was because there was no sports on, and those same people who used to like betting, sports betting, couldn't sports bet anymore. So what did they do? Moved across to the financial markets. So, which is a positive for the financial industry, of course. So for people now who are all going back to work and haven't got the time, you've got people who are time poor. So yeah, it would be a pro for them. It'd also be a pro for, well, both experienced and less experienced alike, really, because you're going to have experienced traders like myself who might say, well, actually, I wouldn't mind having some of my funds traded automatically. And certainly less experienced traders might say, do you know what? Like I've already said, I either haven't got the time to learn to trade at the moment, and it'd be nice to have something that I can manage a bit easier and just manage the system, but I'm not having to make trading decisions on a day-to-day, week-to-week basis because the system's doing it for me. So all I have to do is just keep an eye on this and monitor the system, basically. So that ticks a box for those sorts of people. And I guess for those people, like I've already hinted at, the people who are looking for that easier approach. So all they need to then do is just manage the systems, like I've already said, rather than making trading decisions. So those are sort of my pros and cons of automated trading. So I've had various experiences of automated trading over the years. In fact, it was about, maybe 11 or 12 years ago, had my first experience of automated trading using black boxes. Now, black box automated trading is that you don't know what the actual system is that's powering, or the strategy, should I say, and that are powering the system. Now, so that's why I call them a black box. You don't actually know what the decision-making processes are within the black box. They're kept secret because the programmers don't want to hand out their secrets, sort of thing. Now, I can look back at that now with the benefit of hindsight, 11, 12 years on, and say, actually, I wouldn't want that. I wouldn't want to be blindfolded. At the time, it seemed quite cool, but looking back now, I would say, yeah, I wouldn't want that. I'd want to know what the strategy is, what the trading decisions are that power the automated, if I'm going to have an automated trading system, I want to know what the strategy is that's powering it. So with my system, everybody, all my traders who use it, they all know the details of the strategy that powers it. And I think that's really important. I think that's, and it's not just because of the system itself, but also they can actually still, because a lot of our traders obviously do want to manually trade as well, they can actually take that strategy and then still go and manually trade with that strategy by themselves as well. So then they've got that strategy forever. Even if they decided, you know what, I don't need this automated software, I'm just going to, at least they've still got that strategy. So that's how my attitude towards this. So let's actually move, now that moves me quite nicely into the strategy, because we all have to have trading strategies. I've got my charts up here. You should be able to see is my cursor moving around on the screen? Can you see it moving around now? You should be able to see my cursor moving around, hopefully, on the screen a little bit. And so I've just got, it doesn't matter what the chart, or the chart actually is of euro dollar here, the biggest currency pair. But I'll go into a high level of what my strategy is. And this particular strategy, I've been trading, I don't know how long now. I would say about what we are in 2021, so probably about 8 years, this particular strategy. And it really is personally my most successful strategy. It has delivered some of my personal biggest gains in my trading. It's what we call, and some of you all know, I'm sure, my divergent, what do we call it? Divergent swing trading strategy. So in essence, it's trading divergences. Okay, so there's no big secret about it. I'm quite happy to talk about it at a high level. The only thing that I won't go into this evening is the absolute details of the rules of it, because that's obviously something I'm not going to give away, because we've got customers who have got that. But certainly it's looking at divergences, a bit like back down here. This is I've got this euro dollar chart where you see the euro dollar was coming down into August, mid-August or so, but I've got an MACD indicator down the bottom. The MACD indicator was rising, even though price was coming down into a support zone down here from these prior lows and whatnot. So that's a classic example of divergence. I was buying that with some of my traders a few weeks back in late August. So that is a classic example. All right, I'm not going through all the details of it, but like I said, I've had some of my very best trades over the years have been as a result of divergence trades. And it doesn't matter if it's on a daily chart like this, or it's on a weekly chart now, or a monthly chart even. Now, as a weekly chart example, at the beginning of the year, right on the 1st of January, I was trading right at the beginning of the year on the short side, because the euro dollar was diverging on the weekly chart, where we had price making new highs, but the indicator, the MACD, was not confirming, giving a divergence. So like I said, I'm not going to go into all the detail, but if any of my traders are here, I don't know who's here tonight, because I don't get to see that. All I see is any comments that come through. Then yeah, we rode that one pretty much all the way down, I think, with some add-ins along the way. And that's the point. It's not just the strategy by itself. It's what you do with it. It's how you manage the risk. It's how you manage the management of the trade as well, is what makes a strategy profitable or not. You could have 10 people with my strategy, and we could all go off and trade the same 10 divergences. Let's say we took, over the next 3 months, I, myself included, and 9 other traders, I said, right, okay, you're going to trade that strategy, that divergence there, and this one here, and this one here. And you would see 10 different results potentially, because you're going to have different traders who are going to trade the divergence, but they might manage their trades slightly different to each other. They might exit at different levels. And that's just the nature of trading. That's just what makes the market, as I always say. There is necessarily no right or wrong. It's a case of each one of those individuals trading according to their own mindset, their attitude towards risk, their attitude towards holding on to trades or banking trades or using trading stops, you name it. So it doesn't really matter what the pattern is or what the strategy is. It's really about the individual and how the individual goes about trading it. So my strategy with all the actual rules is what's powered into what goes into the system. And so it's not a black box. It is a system powered by something that I've been trading with for years. So let's actually move on to the system, and I'll just show you the system a little bit here tonight. Then we can do some questions and answers and stuff. Because, like I said, there are pros and cons to automated trading, as I've already said. And I'm not going to sit here and say to you, yes, I've completely relinquished all control, and I've got my entire pension fund, as I call it, my main trading accounts, all on automated trading, because I don't. I still, like I said, love the art of trading myself. Like I've already said, I'm passionate about that, and so why would I want to relinquish all of that and never trade again when I've been doing it for 24 years? Now, maybe when I get to a lot older and I don't want to do it anymore, then maybe time change. Things change then. But right now, at the tender age of 48, I still feel like I'm young enough and enjoy the art of trading enough for myself to want to use all that experience that I have over the last nearly 25 years to pit myself against the market on a daily basis. So, but don't get me wrong, I have got money set aside for this automation as well. So let's actually bring it up now and go through it if I can figure out where it is. I had it off screen. Where is it? There it is. Okay. So this is the Ezeetrader, my Ezeetrader artificial intelligence system, so to speak. So I'll come back to you any questions later, JT, because I'm in full flow at the moment. So definitely will answer any questions or any comments that you've got there. So I'm not going to go through everything, but I'm just going to highlight just how this sort of thing works. So for someone who's either not a technical trader, so either they're not a technical trader or they're fairly new to trading, well, this is just a website effectively. Don't bother going to the URL because you won't get into it. It just cut you off. So don't bother. But anyone can play with a bit of software. And that's what I'm going to demonstrate here, just how simple. You've got something which is already programmed into the software, and just by having a play with it, see what you can do. So in fact, I've just got at the moment, you can see there's a training ground here, then there's a paper trading mode, and then there's live trading. So I've just got this in this is on a obviously I'm not using this particular software here at the moment. I've just created this paper trading mode just recently, so I've got something running here. So training ground is when I want to do any back testing. And the beauty with the back testing feature is it will do a full back test of sort of up to 10.5 years in a matter of seconds. Then you can run any back tests you've got. Once you're happy with them, put them into live paper trading mode. And then once you're happy with live paper trading mode, you can then drag it across and oops, I've just clicked on it. Let's just go back for a minute. Then you can go back, then you can move it across into live trading mode as well. So I've stripped all this out so we can just start from the beginning, so to speak. Now, what's really nice with this software is that you can actually go to something like my Discover section, and you can see what other people have been doing. So you can actually peer over the shoulder of bots that other people have created. And that's what we're going to do a little bit just for 5 or 10 minutes here now. So you get an idea of these bots that people are creating. So this is, I've got this in training mode. So what this is here, these are bots that people have just been back testing. So these are fully back tested bots where people are just having a play. Okay, so we've got some crazy annualized returns. I pay very little notice to them. If you actually look at the drawdowns, some of these bots would just break. Okay, that's the reality with some of these. But this is just people playing in this arena here. So in the training area, this is just where it shows up the top 40 of whatever's here. So it'll show the top 40. Of what people have been creating. And so I would be much more interested in bots down which are making more, what I would sort of say, more sensible returns. 812% annualized return, but with effectively a 90% drawdown. nobody in their right mind is going to really want to trade with something that aggressive, are they? I wouldn't have thought, because it's too high a probability that you're going to blow up. So what you're really looking at is some less volatile bots. But the problem is with the less volatile ones, they're not in this section because it's only showing the top 40 probably, but we might see some. There's one here. Oh, blimey. Look, this one's done an annualized return. Blimey, this is quite good, actually. Look, an annualized return of 250% with only a 16% drawdown. I mean, I'd have to go into the settings and have a look at that, but that one looks better. Still very, very large returns, but this is the beauty with this. So you've got my strategy, which is powering this. Okay, so it's my divergent strategy which is powering it. But then what effectively people are doing is then changing things like risk reward, all the different variables, which I'll show you in a moment. And I'll create a bot in a moment as well. And that's what people are doing. So this is just where people are creating them. Then I can then go across and see, okay, well, let's have a look at bots which are in live now, but they're in paper trading mode. So these are bots which are actually running and have been running. We can see that this one's done 271 trades so far, 276, and all sorts here. So, and these are genuine returns over the last few months. But this system, as it stands, has been running a few months now. This automated system. Now, I say automated system, it is fully automated, but we still have, I looked at the stats earlier on, about 23% of our traders still have some of their bots on semi-automated. So they just take the signal, the system will generate a trade signal, it'll send a signal to their phone, and then they just accept or decline the signal. They do that. So it's about 23%, I think it is. Might have been 21%, but it was over 20% anyway. But the majority of people are using it as a fully automated system. So you can go through all of this. And again, these are what people are creating here. And this is over the last few months. There's some fantastic performance I can see here across all of these in paper trading mode. And what our traders are doing, they're running systems in paper trading mode. And then if they're happy with them, they'll either promote them into trading live onto creating a live bot, or they'll tweak them, and then once they've finished tweaking them, then they'll promote them into live. So let's now go into live so we can actually have a look at live bots here. And so these are people who have already gone live. So you've got the paper trading mode, you've got your back testing, and then once you're happy with your back tests and paper trading, then you can go into live mode here as well. And you can, so we get an idea of the performance over the last few months. Now, like I said, some of these, this one hasn't been running as long, I'm assuming, because it's got 25 trades, where this one's got 160. But it's not always the case, because it depends what time frames people have got. Now, the nice thing is that you can cheat in a way. You can at least look over someone's shoulder. So if I wanted to look over this consistent one, which has done 24% so far with only a 5% drawdown, I can click on the settings over here and I can cheat and see, oh, right, okay, so it's on the 7 major currencies. It's got 10 exotics running as well, and it's got 8 indices, the Dow Jones 30, the S&P 500, Russell 2000, NASDAQ, etc., etc. It's only running on 2 time frames, on a 4-hour chart and a 6-hour time frame, and then there it is. There's it's got 3% risk per signal, so that's quite chunky. So as far as risk is concerned, so different people are going to have different tolerances to risk, but still interesting nevertheless. So. And why would one person risk 3% per trade and then someone else not? Well, like you probably just saw on that one's being run on a $1,000 account. I think I saw at the top there. So look, initial capital. So it might well be that whoever's created this bot has actually got other bots out there which are risking less. And so they've said that, because some traders say, well, actually, I'm going to take on more risk with a small little account, knowing full well that it's going to be quite volatile if you're risking 3% per trade. But on a larger account, they'll have less volatile strategies. So what I'm going to look now, just going to have a look through here and see if we can find anything which just having a scroll through that looks, again, what I'm looking for is it's not just about outright performance. It's not just about outright performance. This one's 54% return, 16% drawdown. So it's not too bad, but, you know, let's have a quick look. Oh, it's got a fixed amount risk per trade. So it's not risking a given percentage per trade. It's actually, whoever's created that has got it on a fixed amount. So you can vary so much. We're just going to have a look at a few as we go through. This one looks quite nice because it's 19% with only and it's done 71 trades with only a 6% drawdown. So that one's worth looking at. So let's go and have a look. So it's done 7 majors, 21 the crosses, the major cross pairs, and 2 commodities in gold and oil. And it's on a 4, 6, and 8 and 4, 6, 8, and 12-hour time frame. It's risking 1% per trade. It's got variance of stop losses and target prices. It's set to move stops to break even once once the trade gets to 1R. So it will move the stop up once price gets to us, and you can select how you want to have that. In fact, and then there's some more objectives down here as well, looking at this. So minimum profit of $100, minimum win rate of 52%, expectancy, which is win rate and risk to reward, to give a ratio. That's what expectancy is. And then it's put a maximum 10% into this as well. So as a drawdown. In fact, so this is what I'm saying, that you can go into the settings and then sort of, like I said, look over the shoulder of a bot that's been created. And you could say, actually, that one looks reasonable. Let's go and actually explore that. So what I can do is take those settings. So I've just taken a screenshot of those settings and now go and create a bot myself. So I'm going to click on here, create a bot, click on the DST. I'm going to name it. For now, I'll just call it Charlie. And so it was, already forgotten some of the majors. I think it was the 7 majors. I've already forgotten the minors. And I think it was gold and oil as well. Yeah, there we go. I think that was it. And I think it was 4, 6, 8, and 12. Yeah, that was right. Got the divergences in here. Do you see what I mean? How easy it is to navigate yourself around the software, even though I'm probably going quite fast. Once you get used to it, you're just playing with it until you find settings that you like. So so I've got so it was that and that. Move the stop to break even once it gets to 1R into profit. I'm just going to train it on all data. And then there's some custom settings down here that that bot had a minimum profit of 100. I think it was a minimum win rate of 52, but I'll just do it at 50. There was a minimum expectancy, which is risk to reward and win rate of 0.22, I think it was, 2.1, but I'll just leave it at 2. And a maximum drawdown of 10% drawdown. So let's take it to 10 and then click on OK. And I've got all my green ticks along the right hand side now. So I'm now ready to start bot training. So I'm going to now train the bot over the last 10.5 years. And this is, like I'm saying, just how this is where it's revolutionized. You know, I've just talking at the beginning of this presentation about my personal love for manual trading and everything else. But this is a really cool piece of software because it is taking at least my strategy and then it's looking. And the only reason this is going slow here this evening is usually a lot faster than this. It's just because I'm using a lot of juice on my PC while I'm broadcasting here. So it's normally a lot quicker than that. And then it'll go and do a back test. There we go. So it's now giving me a full back test, giving me an annualized return over that entire period, right away back from February of 2011. So yeah, about 10.5 years. 83% return with a 17% drawdown over that period, a very strong Sharpe ratio, and expectancy coming out at 0.27 as well. So it looks pretty good. And I can actually click on the trades, and then it will show me all of those 2,000 odd trades. I can then pick out every one of those trades and go and have a look at them as well if I want to do all that as well. And there's all sorts of other stats in here. I can click on the yearly figures to see how, year on year, how those particular settings have got on for that strategy. Has it had any losing years in that time? The reason it's growing is because the account's growing. Okay, so that would be a natural sort of thing that you would see. The numbers are growing right away into 2021 because obviously its starting balance was at 10,000. And so anyway, so there you go. It gives you an idea there. If we go back to the Discover section now and back in, then you start to get an idea. And if I go scroll down, is there any more that might be of interest? This one's interesting as well. Look, 16%. I'm just eyeballing this, and 8% drawdown. So that one looks, mind you, this one is 16%. Oh, okay, that's only got 14 trades in it. So I'm more in, this one's got more trades. So I'll go with this one because it's got more trades. I can click on the settings, have a little peekaboo, and this, all right, it's only on a 2-hour time frame. So that person, whoever that one is, they've got a wider stop I can see as well. So they're using a wide stop, but it is only on a 2-hour chart. A wide stop on a smaller time frame chart is fine. So that one's of interest. And again, I can just keep going. Look, there's one on oil here. So I can go and have a look and see, well, it's done 13 trades, 15% up. Remember, these are all live accounts. We've only 4% drawdown thus far. Let's go and have a look. It's on a daily time frame as well. So this one would have only been running. It's not done that many trades. So doing pretty well. So this is what's really nice about it, is you can actually see what other traders are producing. Take something like Dragonfly down here. What's this? Okay, so this one's done 8% and only done a 1.8% drawdown so far. So, and it's done 14 trades. And you can have a look and you can say, right, I quite like that, but I'm going to now take those settings and I'll tweak them because I want to create something of my own. But at least I can have a look at what else has been created to give me some sort of guidance as to what there is. So I can go all the way down here, and don't think that you have. Of course, some of these have done a lot more trades. So some of these that have done the bigger percentages have done more trades. So as I scroll down, some of these have done fewer trades, as you can see. But if I have another, so don't think that, oh yeah, well, for example, look, this one actually has done 226 trades and is 7% up. Well, 7% is still a very good return over the last couple of months or so. It's still a very decent return. Let's have a look and see what it's doing. See, it's done a lot of trades because it's on the hourly and 2-hour time frames only. So whoever's done that, produced that bot, it's done a lot of trades because it's only on small time frames. But still a good, solid return with, considering, let's have a look here, 226 trades, but only a 3.5% drawdown. That's pretty interesting as well. So there you go. So it's just me just going through a few of these. I've just shown you a little bit I've just shown you an example of me creating a bot there. Did it create? I think it did. Charlie, there it is. Yeah. So it's there and it's created. It's sat there. I'll get rid of it. But how simple it is to go in, create a bot, see what other users are doing, seeing what other users are, not just in paper mode or live, but also in backtesting modes as well. And it gives you ideas. But the bottom line that I like about this software is, yes, it's got all this interactivity. You can connect you connect your trading accounts directly into it and all that sort of stuff. But you still got, as it turns out, a lot of control on it as well. So what your then job is almost like becoming like I've said this before to Sam, like a portfolio manager, because what you're doing, I'll answer your questions in a minute, but what you're doing is managing the system. And one thing that you do need to do is periodically to retrain the system, because let's say you started it today. So you've done all this back testing, and you can do forward testing with this software as well. So you can do forward testing. So you've done all your back testing, you've done forward testing, you've done all sorts. You've run it in paper mode and you're ready to go live, and you've gone live, let's say today. But in 3 months' time, there's 3 months of data. So the system's been trading, but you might now need to what we call retrain the system. And you just click a button and you do a retrain. So the system will then retrain, because it will take all that latest 3 months worth of data and include that into its entire backtest. So that if it needs to tweak some of the settings, it will do that when you retrain it. Much like you would do if you were manually trading and you'd want to go back over your strategy and periodically do a new backtest or whatever. That's essentially what this system will do, but it'll do it in a matter of seconds. Anyway, let me have a quick look here. So JT, you said divergence with low on the curve bullish, divergence high on the curve. Yes, exactly. Yeah. Would be nice to test it for 7 days. Yeah, we just don't offer that PW. It's from our perspective, it's one thing that we've always done at Ezeetrader is it is a leap of faith. I agree, PW. If you wanted to get hold of this, it is a leap of faith. But one thing that I've always done is I've prided myself on my reputation as a trader, and that's why I do things like, as you know, the trading challenges. I'm 5 times winner of the London Forex Show, live trade off, and all these things. Being an FCA regulated money manager as well. Half the reason I do the things I do is to add that layer of credibility to what I do. So, but I still am asking people I agree, to have a leap of faith. So if you want something of on Ezeetrader, something like this, then it is a leap of faith. I agree. But what I say is, look, what you're getting is not just the software you see, you're getting the strategy as well. So, and that strategy you can take away forever. In fact, Sam's got a deal at the moment. So she is doing a deal on it. I'll give you the link actually. And so if you go to that website there, I've just put it into the chat box. Have a read of it. Sam's put it all together, and she's doing a deal for the next week or so, whereby you get the entire strategy. So you then learn my entire strategy, and you get a month's free access to this software included with that. If you don't want the software after that, then you don't have to subscribe. You don't have to continue. You can just cancel it, and that's fine. But you still get to walk away with my entire strategy, and that's yours, obviously. So that's what we do. It's not, I don't think it's allowed me to, for some reason, put the thing into the box. I'm not sure if it's going through or not. But if you go to the website is this one here. So Sam's put this together. Ezeetrader.com/AI-auto-trading, and that's how you can go about getting this if you want it. But take your time with that sort of thing. I always say to people, just email Sam at Ezeetrader.com. Email her, and you can always ask her questions about it, and anything you want on that side of things. So just email her. But anyway, let me come back to some more if there's any other questions here. You assume you're using high quality backtest data for accuracy. Yes, Ian. Yeah, we use a single source broker. We use Pepperstone's feed. Pepperstone are a good quality broker. We use their feed, and that feed has been collected live over that last 10 years or so. So yes, we do. It is important. Fun enough, it's more important for intraday. If you've got an intraday system, Ian, this really is more swing. It will go, as you've seen, go down to hourly charts, but most of my traders don't have it running that low, because it just creates loads and loads of trades, and I don't have my systems running that low. The lowest I go personally is 4-hour charts. I'll have a look at a 2-hour chart, some bots, but I haven't created a bot with 2-hour timeframes myself as yet. The lowest I've gone is 4 hour, because I don't want something just trading like a banshee every day. I want mine to be slow and steady. That's how I have mine. So yeah, intraday. If you're creating an intraday system which is running off of like 5-minute charts or 10-minute charts, my word, you need some quality data. When you've got something which is running on a swing trading, you still got to have good quality data, but certainly what I mean is execution is less important. So let me give you an example. If you've got a day trading system running off of 5-minute charts or whatever, and it's trying to generate, it's having stop losses at 10 pips and targets of 15 pips. Well, we all know that the reality is in the markets that you get slippage. And you get a slip of 1 pip on your stop. Well, that's an extra 10% on your stop loss. But if you're swing trading and you've got let's for argument's sake, an 80 pip stop loss, and you get slipped by a pip, well, it's in percentage terms, it really doesn't matter, does it? So intraday systems are a lot more fragile, and the what's the word? The potential for things like slippage to affect an intraday system is going to be much more heightened than with a swing trading system. So you can change the EMA band settings. Yes, you can, Ian. Yeah. When we launched the fully auto version of this, which was a few months ago, do you know what this is the irony of this system, is that when this was first put together, it was put together as an aid to traders. So a semi-automated, we launched this about a year ago, semi-automated as an aid, as a support, as a great backtesting engine, as a signal provider, and all those sorts of things. And then we've ended up having to bow to pressure because the amount of people who kept on saying, why can't you do fully auto? Why can't you do fully auto? And we've had to bow to pressure in the end. Now, when we had the developers had to reprogram a lot of stuff in order for it to be able to fully auto trade, and so we had to give our users a lot more flexibility as well. So things like changing little settings like that, Ian, then yes, you can do. JT, you've just said, how do bots work for day trading? I would stay well clear myself. I'm just not. I think that day trading, like I've said, because of slippage, it makes them, like a Formula One car in the 1970s, brilliant at going around the tracks, but quite often the engine would snap. And so they're just a little bit too highly strung, like a highly tuned Formula One car, like I said, from decades ago. I think because of the market. It's not because of the system. You can create an automated intraday system, but the danger is things like slippage is the biggest danger, really. Slippage, spreads widening, which will affect it because of the nature of, if you're using 5 pip stops, 10 pip stops, a bit of slippage or widened spread massively exaggerates your loss than it would do for someone who's swing trading. So yes, absolutely. The signals, I mean, you can have this system running. If I go back out here to the dashboard, I can have this in autopilot mode, or I can click on this. Oh, that's actually got this paper trading has actually got 2 live trades on it at the moment, so I can't actually do anything with that. But you can have that. What was this one? Oh, this is one we created. Let me just chuck this one into paper trading mode, and then I can either have it in signal mode or autopilot mode. So I can decide whether I just want to receive signals and do it that way, and then manually decide whether I want to accept the signal or not, or I can have it in autopilot. So coming back to your point there, Ian, is that yes, you can just have it in signal mode. because yes, you can't possibly cover all setups. Now, there is a flip side to that. What you have to do is when you're creating a system is that you don't want the system to go and overtrade either. So you could throw the kitchen sink at this system, but you don't want a system that's over trading. So again, it's finding the right balance for you and finding the balance from a margin perspective as well, because bear it in mind, we all have margin requirements from our brokers. Now, JT, you're in the States, as you've already said, so you probably have much higher margin for Forex trading. Over here in Europe, we're only at, 30 times leverage nowadays, where we used to be able to have 100, 200 times leverage, like probably in the States. So what you don't want to be in a position is just letting the system rip, and it'll just go and put 40 or 50 open trades in over a period of, I don't know, a few months, and then you hit your margin limit sort of thing. So you don't want that. So it's a case of creating a system that doesn't overtrade as well. So now you can create it that way, or you can manually deal with it that way by just running signals, as you say. But yeah, you don't necessarily want to be in every single setup, is what I'm saying, because of you could end up with a system that's trading too much. Thanks, Justin, and you too. Have a good week. You got 50 times over there, right? Okay. A Ferrari versus a Hyundai. Yeah, I mean, that's an analogy, yes. And so, yeah, that's my personal, again, I've always been quite, when it comes to trading, I'm very open to whatever individuals are doing. There is no right or wrong way to trade. Now, there's a way to trade where you might be losing money. So you could say, well, maybe that's the wrong way. But even then, well, depends on for how long you lose money. You might actually have a winning approach, but it goes through drawdown periods. Like all systems or manual traders will have winning periods and losing periods as well. So I don't think there's any right or wrong way to trade the market. It's just finding the right way for you as an individual. And that really brings me back to what I said at the beginning here tonight, when I talked about the pros and the cons of automated trading. Again, even with auto trading, it's not going to be for everybody, because some people want to just say, no, like I said earlier on, I love the challenge of pitting myself against the market. And I love the processes that I go through, the intermarket analysis, the multiple time frames, all the other stuff that I do. But I must admit, this software is pretty much fun. And I appreciate that for some people, they'll look at this software and say, do you know what, that's really cool. There's a strategy that Charlie's been using all these years, programmed behind this software. And actually, I can then tailor make it by playing around with it, seeing what other users are doing, and then fine tuning it to a level that I'm comfortable with, and then going through the process of running it in paper mode and then putting it into live trading mode, and then just retraining it periodically, and not having to day to day find trades, sitting there in front of the charts like I do, looking for trading setups. You don't do that. You end up just managing the system. And so I get why for some people they're like, yeah, I really like that, or they could have it running alongside their other manual trading as well. So, and that's what makes the market. It's the same as when I put these YouTube videos out, and I do have to laugh periodically when you get some people really take you to town on whatever subject it might be. But that's what I always say is what makes the market. You sometimes ruffle some feathers when I put something out which might be slightly more controversial to some people. I think probably one of my most controversial videos I've done on YouTube is one where I've talked about moving stops to break even. People get really upset with that. But, that's what makes them up. People are going to have different views and different strategies, different approaches. There's no right or wrong way to trade the market. It's just it's about the individual and their own mindset. That's my view, and how they approach the market, how they deal with having wins, strings of winners, and more importantly, how they deal with strings of losers as well. Can they deal with that? And so really it comes back to the individual for me a lot of the time, rather than their actual approach to the market itself. Are there any plans for you to add more than one strategy? I've already got 2 in there, Ian, now. So there is more than one strategy in there. So there is a second one in there. And I may put another one in, but I don't want to overload it, Ian, because it just creates so many. You can end up, there's so many different bots that you can create even now, with so many different settings that will take different types of trades on different types of time frames and stuff. That if I just keep loading up more and more strategies into it, it just become a minefield. So I have to be careful of that. But yes, I think that the potential to add one more in there is there. But yeah, there are 2 now. And that, for me, as far as I'm concerned, is more than enough. But I think I will end up putting a 3rd one in. Not that it's really necessary, but does the software consider correlations? No, it doesn't. The software is literally looking at the pattern itself, and then it's looking at all of the data. So it's looking at all the inputs that you've put in, and then it'll just run back tests to say whether those particular inputs are profitable or not. So then you work with your inputs to create the type of profitable strategy or approach that you want from it. Like you've seen earlier on, do you want something that can make 100% a year, but might have a 70% drawdown, or do you want something that can make 50% in a year, but with a 15% drawdown? It's about playing with the system in that regard. So, but no, it doesn't look at correlation. That would just make it so crazily complex that we haven't done that. No, see, I would disagree with you there, JT. JT, you said moving stop to break even after achieving 1-to-1 is, you effectively, I mean, and again, it's your view, but I don't agree with that. Now, I'm going to have to backtrack a little bit as well. It might be right for the system. I showed you one earlier on when we were in the Discover section, when we were going through this, and there was a couple in here, I think, where when we went into the settings, where people had it. I think there was this one actually. This one did have it set where you move the stop to break even at 1-to-1, and that can be highly profitable, but it's not a guarantee. And this is the thing: people think, oh, you're in a risk-free trade. No, it's not risk-free. Just because you've moved your stop to break even, yes, on that particular trade, it's risk-free. You can't lose. But if you took 100 trades like that versus 100 trades where you left the stop alone, you might find the 100 trades where you left the stop alone might actually be more profitable. Do you see what I mean? So it's not as cut and dry as, yeah, move the stop to break even. It depends on the strategy, of course, and it might well be that a particular strategy is better off by moving the stop to break even, but don't naturally assume that moving a stop to break even is going to be the right thing for every strategy. Not at all. No, I haven't. I haven't put crypto into here as yet. The problem that we have over here in Europe is that a lot crypto on CFDs, because crypto itself is obviously highly volatile. You combine cryptocurrencies with CFDs, or forex, CFDs, which are using leverage. You've got leverage on something which is highly volatile. So I think with it over here in Europe, a lot of cryptos are banned on CFD platforms because it's too volatile. So on a lot of platforms it is. So we haven't put it in, but it's not to say that we couldn't find a way to put it in at some point going forwards, because there are other ways to trade cryptos, obviously without CFD accounts. So could we have our software connect to something like Binance or whatever. So I don't know, but those are the sorts of things that we would have to look at, and I think we will be looking at probably going into 2022. But again, like I've already said, this creates so many trades anyway. When you look at the if I go into a bot creation again, we've got 7 major currencies, 21 minor currencies. We've got exotics, 10 exotics. We've got 8 equities and 2 commodities in there. It's a huge amount of markets. That's too many to put into a single bot anyway. But there's a lot of choice in there already, and again, it's one of those situations where you give people stuff and they still want more. So there is a huge amount in there. Do we have to have cryptos? We added in exotics. We added in because we were having people saying, "Oh, it'd be great to have some stock indices." So we've put those in now, and we've put a couple of commodities in now as well. So there's a lot more choice than there ever used to be. But I'm not saying that we won't put cryptos in, because I think if we can, if it's doable, but it's about trying to find a broker setup that will work with the software and the technology, because we use MT4, you see, and so as it currently in its current state with MT4, but we will be progressing to MT5, and we'll have to see what happens in the future. No, you don't, Ian. If you're already a DST owner, you don't have to buy it again. No, just speak to Sam and you can just subscribe to the software, and you can unsubscribe at any time you like, Ian. So yeah, no, you don't have to buy it again. So if you've come down on the package here, and if you scroll down, basically, I think it's normally, I don't know. Let's have a look and see what I don't know what DST by itself is normally about £1,000, I think. But Sam's thrown in all of this stuff and discounted it to £597, and then it's £129 plus VAT a month. But the first month is included in that 597 anyway. But for you, Ian, as an existing owner of DST, you don't have to buy it again. You can just go straight into the subscription. Yeah. So there you go. That hopefully that brings my sort of presentation to a natural conclusion here. I'm quite happy to carry on talking. If we want to look at the charts, we can have a look at the charts, but I wanted to just have, I love what we've got here, and I want to get it out to our YouTube channel, because I've not done it before, to our YouTube channel, just to talk a little bit about automation, my feelings about automation, the pros and the cons, and then showing you just what I do have here as far as automation is concerned, and what we've got already running, which is pretty impressive piece of kit. Now, if officially the presentation has ended here, but I'm quite happy to have a chat with if anyone wants to talk about the markets or anything like that. Who was it? Was it someone was asking about the stock markets? Now, was it yourself, JT? You were asking about the stock market earlier on. I'm not entirely sure, but the one thing that I've been saying for all of this year, and probably part of last year as well, is that the stock market's just, my concern is that, and it's not a concern, it's a concern for the bears. My concern for the bearish case, should I say, is that we keep climbing this wall of worry in the equity markets. And of course, at some point, there will be a larger correction. And of course, the stock markets have come down. They have done another minor correction in the last week or so. But my concern is that as soon as we see these corrections, these small corrections, like I've just got the S&P up here, so quickly people get bearish and start talking about crashes and everything else. Now, anyone who's been trading for a given period of time will understand that markets collapse when everyone's euphoric, not when lots of investors and traders are scared. And yet the markets only have to come down a couple of percent, and investors get scared and nervous, and we see that in the likes of the VIX, the volatility index. We see it in put call option volumes as well. So we see it in a range of and general sentiment, other sentiment boards like Twitter and various things. So my concern for the bearish case, even though we are now from a seasonality perspective, we are seasonally in a weaker period now in September and going into October for the stock markets, but there just seems to be too much pessimism, and we almost need to see everybody throwing in the towel. And it's that moment when the market corrects and most people are saying, yeah, buy the dip, buy the dip. And of course, there are people who will be saying that, but there seems still at the moment there's too many people jumping on the crash bandwagon as soon as the market starts to dip a bit. And my concern is the market is less likely to crash when you've got so many people who are still thinking that it might. So that's my general view there. So that's a long-winded explanation of why I think the market will probably carry on going higher. And now I've said that, it probably will crash. But I'm not in the business of predicting markets. I don't care about where a market's going next. If you're a trader, you don't need to care about where a market's going next. You trade your patterns, you trade your signals, whatever it is, the technicals of how you trade. You don't need to worry about where the stock market's going next or where any given market's going next. You just trade. You do your analysis. That's what I do. I don't sit there and make predictions. I have no interest in doing market analysis for people, because I do it within our trading room, of course, with our members, but it's just an opinion. I have to trade my view. So I'm only interested in just trading my view, and I know that a certain percentage of the time I'll be right and a certain percentage of the time I'll be wrong. Outside of that, who cares about whether the stock market's going to go up, down, sideways? Trade the charts, exactly. Look, I think that brings us to a lovely natural conclusion. I haven't had my tea yet because in the UK it's 7:30 p.m. So I'm going to go off and have my dinner. Thank you ever so much. I don't know how many people were here tonight, and people will be watching this video. I'll just put this back onto the, if I can figure out how to do this again. So you can see me again here. And so thanks very much for coming along and listening to me as I've been talking here tonight about the charts, the patterns that I use, and a bit about automation as well, and whether it's right or not right for various people. But and hopefully I'll see you guys again at some point. I'll try and do more of these live presentations. I should do them more often. When I do the challenge webinars, that was a live one on YouTube, but I need to do these more often. So I'll endeavor to do that as well. So yeah, enjoy the rest of your days. Enjoy the rest of your evenings. Take care. Ciao.